Okay, let's talk about Warren Buffett's Berkshire Hathaway. They recently made some moves in terms of purchasing shares of certain stocks and selling shares of other stocks. Now, we're going to examine what they did, and we're not examining it from the standpoint of saying you should go out and buy or sell just like Warren Buffett did. We're not doing that because Warren Buffett has a completely different set of circumstances than you do, probably, unless you are a multi-billionaire listening to this YouTube channel, which is entirely possible. I know they're out there. I know they're listening to what we're saying. But unless that applies to you, then you want to be cautious. Because let me tell you a few things about Berkshire Hathaway. Number one, they're a huge company. In fact, they're number 6 on the Fortune 500 list. That is pretty phenomenal. In the top 10. What does Berkshire Hathaway do? Who are they? Well, Berkshire is a holding company, and they own companies like Geico. You've heard of Geico. What's the other one? Dairy Queen. They own that. Burlington Northern Santa Fe. Now, that is a railroad company, and incidentally, you hear about pipelines getting shut down, and people are happy about that or people are angry about that. But follow the money. Why? Who would benefit from a pipeline getting shut down? Why? Warren Buffett and Berkshire Hathaway. And the reason for that is because they own Burlington Northern Santa Fe, and Burlington Northern Santa Fe has a fleet of tanker cars which are perfectly capable of transporting oil by rail all across the country, into Canada, down into Mexico, wherever you want to go. Okay, so follow the money. Berkshire also owns Duracell, Fruit of the Loom. I've heard of them. They own some lesser-known companies. You've heard of Benjamin Moore. They're a paint company. They own them. Helzberg Diamonds. Here's an interesting one. They even own the multi-level marketing companies, Pampered Chef, Kirby Vacuum, and World Book Encyclopedia. So consider that the next time someone downs a multi-level marketing company. It's a lot of financial misinformation in the world today, and multi-level marketing companies should not be rejected out of hand if they've got a viable product that is being marketed. And Kirby, World Book, and Pampered Chef certainly do. So he owns that. That's what Berkshire Hathaway and Warren Buffett, that's what they own. Warren is the CEO of Berkshire Hathaway. So give you a couple of more little tidbits of why you should be very careful and you should not just follow the herd when it comes to you heard on the news, CNBC said that Warren Buffett did this or that. And one of the reasons for that is there's something called a 13F filing. And that 13F basically needs to be filed quarterly. That discloses what a company has done in terms of buying or selling a stock. Now, again, that is a quarterly filing. So that means by the time you hear about what Warren Buffett has done, it's already been done 3 months ago. You're acting after the fact. And if we take a look at one of his buys from last year, one of Berkshire's buys, and I'm using the term Berkshire Hathaway and the name Warren Buffett synonymously, okay? But just know that Warren Buffett did not make these moves personally. These are moves that are made by the corporation of Berkshire Hathaway and dozens of individuals who are focused on helping that company make money, all right? Although I'm going to use those words synonymously. So last year, Berkshire came out and they announced in a 13F filing that they had purchased Barrick Gold. Now, when they made the announcement, of course, it was 3 months after they actually did it, a quarter after they did it. Then, here recently, they announced in the latest filing, it is February 20th of 2020 right now, in the latest filing, they said that they'd sold Barrick Gold. So you're finding out again 3 months after the fact. So that's why you can't just follow a big name and do what they do because you're not acting in real time with them. So by the time they've purchased, the stock has already gone up. By the time they've sold, the stock's already gone down. Okay, so it's not advisable just to do that kind of thing. And I want to also point to another uh, kind of similar anecdote. Tesla bought Bitcoin. Elon Musk did not buy Bitcoin personally. This is very important because if, for whatever reason, Bitcoin that doesn't work out and Tesla loses money on that, then that will mean that Tesla has racked up a loss that is applicable to their tax filings, and they can employ the loss carry forward feature. That way, in the future, they can put that loss up against any gains that they have and mitigate their taxation. Okay. So again, these corporations are acting on a whole different set of circumstances. However, keep in mind that if you have a corporation, you can use that too. You can use that loss carry forward as well. A lot of real estate investors do that, but you can employ that strategy as well. You got to talk to your CPA and your tax preparer. Of course, you got to do your due diligence. So let's get into it. All right, what has he bought recently? And what this is going to tell us is not that we should go out and run to our broker and say, hey, buy me this too. This is going to tell us simply how he feels about certain industries. US Bank Corp, he has pared down his ownership stake in that. Berkshire only owns $6.1 million of US Bank Corp right now. That's nothing when you'll see when we get to Apple, that $6.1 million stake. That's probably the change that he found in his couch cushions. M&T Bank, PNC, and JP Morgan, Berkshire Hathaway has totally exited their stakes. Berkshire has totally divested itself of any stakes in M&T, PNC, and JP Morgan. Wells Fargo, they have pared down their shares of Wells Fargo. They own 52 million at this point. So doesn't look like Warren's too high on the banking sector. Reason being is because interest rates are very low. I think Warren and Berkshire believe that interest rates are going to stay low for the foreseeable future. And if interest rates stay low, that means that banks cannot lend at higher interest rates. They've got to be competitive. So that tells us a lot how he feels about the banking sector. He has reduced his stake in GM, General Motors, by 9%. General Motors has come out and said that they're going to stop production on the internal combustion engine by 2035. This 9% reduction that Berkshire Hathaway just cut off of their ownership stake in GM, to me, signals a loss of confidence in that company. And the reason for that, I believe, has to do with the fact that they are now going to be doing something that they do not have a large depth of experience at doing, and that's producing electric vehicles. Okay, so they're going up against Tesla. They're going up against some other companies. A lot of companies are going to be investing in this technology. And here's something you have to really consider. Let's say you just graduated from MIT. You're one of the top graduates over there at MIT, and you got the world at your feet. And you've got SpaceX calling you. You got Tesla. You've got Blue Origin. You've got Google and their AI shop. And then you got GM. Who are you going to work for? Who do you really think is going to be able to change the world and compensate you and allow you to really have a fulfilling career? GM? Do you think they're going to own the next century? Or do you think another company might, a more technologically focused company might? Recently, Berkshire also, in this latest 13F filing, they also said that they pared down their stake in Apple. Right now, they own 5.1% of Apple. However, you need to keep in mind that Apple has a $2.1 trillion market cap. This is a huge company. 5.1% of that is a phenomenal amount of shares. I think Berkshire is actually, don't quote me on this, but I'm pretty sure they're the third largest owner of Apple shares behind some of the other investment companies. So this is not a vote of no confidence. Basically, what they're doing is saying, we want to keep our ownership stake at around 5%. And when those dividends get reinvested on that huge stake that they own, that buys so much more Apple that, they end up owning more and more of the company. So they've pared that back to 5.1%. Now they own almost 900 million shares in Apple. Now let's take a look at some of the companies that Berkshire actually purchased and get a feel for where their confidence lies in terms of one sector in particular with the economy going forward. It is true that they did divest some of the Pfizer shares that they owned. However, Berkshire went in and purchased a $2.35 billion stake in Merck, a $2.74 billion stake in AbbVie, and a $2 billion share in Bristol Myers Squibb. So to say that he's high on the pharmaceutical sector would probably be an understatement. I think what he's done and what they've done is they've looked at the landscape and they've said, okay, this latest year has shown us how important this sector is. Now, again, we talk about money on this channel. You can feel however you want about the vaccines, but we're focusing on the money. So this play with Merck, AbbVie, and Bristol Myers Squibb shows us that he has a lot of expectations for some solid performance out of the pharmaceutical sector, specifically with Merck, AbbVie, and Bristol Myers Squibb. But there are a lot of companies out there that are involved in that business, a lot of very successful companies. So again, do not just be monkey see, monkey do. Let me just do what Warren Buffett's doing, because you are not rolling with the type of situation that he and that company has. However, what we can do with this information is we can examine it and we can get a feel for what Berkshire believes will shape the economy as we move forward in the years to come. So we can rely on the resources. And again, no one knows the future, okay? But we can be reasonably certain that the resources that have been brought to bear by Berkshire have given us some insight into how the future will play out in terms of industries. And then we can do due diligence and act accordingly in our investment decisions going forward.